So we can get right into it. So we got an hour, but we got a little time, but I wanna dive right into it.
Yeah.
I did take a look at you guys' deck. I think what I want to do is just go through the deck. Um, I have some questions, and I think that'll drive a lot of discussion, and I'm sure that'll kind of tease out some of the things that I want to talk about anyway. So I'm thinking we just go through the deck and then go from there. I already have it up here, so I can just share my screen.
Okay, cool.
Yeah, right here. Y'all see that?
Yep.
All right.
Yep. I see it.
So first, let me say that I think y'all nailed the problem. Like it's really clear. You got the security, productivity, the star revolution. I think that made a lot of sense. So I thought that was cool. No questions there. I understand the problem completely. I understand the solution also. And I would say I did see a few typos in this, so you might want to kind of go through this with a fine-tooth comb when you guys have time. Because I think even here, I think you mean innovative. I think
Mhm.
that's it.
Yes.
Yeah. So, but I wasn't really sweating that stuff, but that's an FYI for you guys. So you're saying basically your solution is on-prem. That's really the secret sauce, that you have this on-prem kind of infrastructure that allows customers to use AI in a secure fashion, right?
Yes.
Uh, so you're coming out the gate saying this is built specifically for law firms and attorneys. Does that kind of lock you into this market?
Well, and again, now that we were having these conversations, it does, but the only reason why we went that route was just because that was where our initial customers kind of came from. So like with the National Bar Association partnership and things like that, that was just kind of where our initial customers came from. So to your point, I mean, could it lock us in? Could we decide to be niched up front? Yes, but then ultimately expanding our offering to like financial services and healthcare and things of that nature. So our idea behind it was to be more niched in the upfront and then maybe spread out in the back end, if that makes sense.
Okay. So you're going to use law firms kind of as your beachhead and then, expand into other industries.
Correct.
Yep. Yep.
Yeah.
Because we
Then
really want to take advantage of our distribution channel with that partnership with the NBA.
Gotcha. And then so one box, immediate solution, AI runs a tight AI system securely in office with one box completely self-contained. Does this solution, when this solution is installed into small law firms, does it present a potential additional security concerns for them in terms of integrity of the data and things of that nature?
Gotcha. No, it does not, because when we deploy the system, we do the installation behind their own private infrastructure. So if they have a VPN service or secure network service that their entire practice is ran behind, because how we do the installation and how we do the setup, that box is specific to that local area network, right? So there's any additional attack surface, then that's mostly your VPS or your VPN on whatever your IT's infrastructure is.
So basically, it's not going to present any type of additional challenge, will you guys have the opportunity to surface any, information security concerns as you install these systems?
Yeah, we can definitely. So as we're doing installations, well, as part of the onboarding process, we typically want to get an understanding of how their current IT systems are set up, what's in place, what's not in place, because that will either have us needing to do the actual VPN installation. So we deploy it with a VPN and we also deploy it without a VPN. It just really depends on what the IT system is set up like for the customer. So with that, we can surface IT concerns as they come during installation, like, hey, this seems like something that you might need, you know, we can scope it out and build it out for you. Or if you have a preferred vendor that you want to work with, we might need to add those things into your current package. So we can always do that sort of assessment of what their IT infrastructure looks like.
Gotcha. Okay. And then why on-prem, which is the question that I asked in our meeting last week. I understand this. Pretty straightforward. But I think, and this is kind of a general comment, when you're just make the language as plain as possible. Like
Gotcha.
the bar that I usually like to say is like fifth grade reading level, because you never know the context people are working with in terms of whatever background knowledge they may have. So I think if you keep it at that reading level, then pretty much anybody should be able to understand it, and you don't run into those types of issues. Let's take like this first line: AI workloads are gravity heavy, or data gravity heavy. That could mean a lot of different things to a lot of different people, a lot of different folks, right? So I would say if you kind of say that kind of more plainly, it may land with more people.
Okay.
But basically, you're saying that proprietary information in the forms of documents, images, and things of that nature, regulation and liability, force intelligence closer to user. What you're saying is the more sensitive information is from a regulation and liability perspective, then the more in-house it should be. That's what you're saying there. And then you're saying it's more cost effective to own the system versus renting it when your intelligence is really the core of the system. When you're saying intelligence is core infrastructure, what do you mean? What do you mean by that statement?
So what we mean is when your business heavily depends on your knowledge bases, your just workflows, everything that allows you to run efficient and effectively, that's what we mean by that becoming your core infrastructure. But we can definitely clean that part up to make it, because I think what we really want to convey here is like an element of AI readiness, from getting your documents in order, getting your data cleaned and in order for AI to really be more valuable for you. I think that's one aspect of it that we want to convey. But then the other aspect is that when you're really relying on just the intellectual layer of your business and you need that to do certain things, owning that is actually better than renting that. So we can definitely simplify this to make it more clear. But those are some of the things that we wanted to convey.
Okay. All right. Capacity expansion, I think that makes sense. So what you're trying to position the solution as, hey, this is not AI for the sake of, reducing headcount, even though that could happen. You really try to position it from the perspective of it expands because you're targeting small firms. So you're trying to say, okay, this expands your ability to do what you need to do. Is pretty much what you're saying here.
Exactly, right? Like, I mean, with them being small firms and whatnot, I mean, the goal is to keep you lean and keep you as not lean isn't the word, but to keep you all as efficient as some of the big dogs, right? To keep you as efficient as some of those enterprise companies. It also was a play on,
Well,
you know,
it's not just efficient, right? It's really, it allows the smaller firms to play in the bigger leagues like the big firms.
Exactly.
When it comes to some of this stuff without,
Mhm.
The larger budgets and the larger overhead that may normally come with that, right? So they can punch above their weight with this.
Exactly. And get them to closing faster.
Yeah.
and then there was
And
also
I don't think it
some
hurts. I don't think it hurts to say that you can do more with less, something along those lines, right? Um, something that indicates that they may not necessarily have to get rid of headcount, but maybe you flip that framing and say it's like hiring, 5 more junior attorneys without hiring 5 more junior attorneys, right? Something along those lines. So you kind of flip that narrative from the headcount perspective. You know what I'm saying?
Mhm. Yeah, that's real. And it was also a play on the idea that you're hearing everybody talk about how AI is taking my job. AI is taking my job. We don't want to be those guys. And I think that can also play into our competitive advantage as well, because that's not the goal of it, right? Our tool is not geared towards having people lose their job, right? Like our gears.
Well,
It could happen. To your point now, it could happen now.
well,
Yeah, it could definitely happen.
I would say be careful about that, right? Because the people who's talking about AI losing their jobs are not people running companies, right? The people who's concerned about that, right? The people
Yep.
who think about that are employees. You're not selling this to employees. You're selling this to business owners running these law firms, who's concerned with the profitability and longevity of their businesses. And
For sure.
so understand, who your real audience is. I understand what that job loss narrative is, but you're not talking to employees, you're talking to employers. And so employers understand the value of being able to do more with less.
Mhm.
But keeping in mind the negative aspect of job loss, that's why I say you can flip that narrative and say, this allows you to do the work of 5, you know, 5 junior lawyers and 2 law clerks or whatever without, without hiring any of those folks, right? So you kind of flip that narrative and it makes it more positive and less negative.
Gotcha.
Yeah. Yeah.
So yeah, but I understand your general point here, and I think it's good. The competitive advantage. I was a little confused with this slide because the heading to me makes it so, well, as I'm looking at it again, I think I understand what you meant. You're trying to say it's a competitive advantage to the small businesses.
Mhm.
Is that
Yes.
what you're trying to say? I thought you were trying to illustrate what competitive advantage you guys have with small business. That's how I thought you meant it. But I think what you really mean is small businesses have a competitive advantage using Lana AI. Is
Yeah.
that right? Okay.
Yeah. But then, quick question to you on that note, right? So with this particular slide, because what we were trying to convey is that aspect of it, but does it make more sense for this pitch deck to have our competitive advantage as an organization with the product that we're offering to our customers?
Yeah, so that's a question that I wrote down. When I looked at this deck, it's like some slides seem like you were talking to the customers,
Hmm.
whereas other sides seem like you were talking to investors.
Understood.
So it all depends on who you're talking to. This is a pitch deck, which means the audience is investors. So if you're talking to investors, it should be all about Lana's, well, that's the product. Is Lana the product or the company?
Lana AI is the product.
Okay, so it ought to be about Lana's advantage compared to, competitors.
Gotcha. Okay.
Okay. Okay.
Because
So what we work.
investors, so investors, we want to see, you know, why you versus somebody else.
For sure.
Gotcha. Okay.
Okay, so that's that. And then the size of the market. Let's talk about this a little bit. So you're saying the overall, that $24 billion number for the legal segment, what exactly does that mean?
So that was just the legal segment in general, right? Like just high level, like legal in like the space in general.
Legal segment, did you mean law firms?
More or less like the legal space, but I guess wouldn't that make up law firms? These are good questions because that's what we were more so thinking is just like the legal space in general commands and demands this amount of money, and then we
Well,
backed it in. Mhm.
I guess my question is, what is the legal space? What is the legal space? I'm asking you.
Gotcha. So the space that we really want to play in and convey on this slide is the legal tech space to represent how much is that space or how much is that industry worth to just the overall economy. And I think we slipped up on this one, but the number that we really want is how much are legal companies, law firms, not inclusive of legal departments within bigger companies, but specifically law firms. We need to figure out. We need to put the number in here. What does the tech spending look like? And then and then we can back into that number from there. But I think as a whole, we wanted to look at and convey this is what the legal space looks like across all the different legal verticals. This is how much this industry is reportedly to grow. But to really narrow it down and bring it home to our niche approach, we'll get that number for the tech spending.
Yeah, and I guess what I'm trying to understand, I'm first trying to understand the highest level that you're talking about. And so at the highest level, are you talking about, you know, wholly owned standalone law firms or or legal departments in big organizations?
Gotcha.
Or,
Yeah.
so that's what I'm thinking about at first at the highest levels. When you say legal segment, I was trying to understand exactly what that means. Is it law firms? Is it legal departments? Is it is it like one lawyer who just graduated law school who's working out of his mom's basement? Like, you know what I'm saying? What does that mean exactly?
Gotcha. So it's definitely law.
Law firms. Okay. So standalone law firms. Now there are obviously different flavors and sizes of law firms. So legal segment is basically all law firms. And then if you drill down from there, I'm assuming where you say here, small and medium-sized law firms. So that'll be your next level down.
Yep.
And then of the small and medium-sized law firms, do you have a more specific target that you're going to try to kind of establish as your beachhead?
And that was where
that's the
Go ahead, Mike,
12,000. Yeah, that's the 12,000 estate planning wills and trust firms, and that number was derived from the actual National Bar Association's member base.
Okay, so and it says right here, so you're going to start with estate planning, the law firms who focus on estate planning, wills, and trusts,
Yes.
in size of 10 to 50 employees.
Yes.
So
Correct.
that's where your small, mid-size comes from.
Yes.
Yes.
And do you know how much those types of firms spend on, I guess, tech, but I would say more than tech is really anything that directly supports how they do their work. Because
We don't have that.
Oh, I'm sorry. Go ahead.
No, I'm sorry. So to that point, we don't have that number exactly, but I think that you're kind of helping us see the forest from the trees, because I think if we can switch around the target to say legal tech, then we can back into how much they're spending on legal tech per year, and then though
Yeah.
that 12,000, then that 12,000 number can then be backed into that way as well. That's what I'm hearing. That's what I'm hearing.
Well,
Because we don't have that figure. We don't know how much they're spending on tech, a year.
yeah, I think that'll be a good number to understand. But I would also say, right, they're law firms, so they're not going to be tech heavy for the most part, right? And that's why I said you do want to know that number, that tech spend number, but you also want to know generally what is their direct spend that helps them do their work, right? When they're servicing the client, what type of money are they spending that directly impacts their ability to service a client? And what are the kind of categories of spending? The reason why I'm saying that is because obviously this is tech, but if law firms just, and I have no idea what law firms spend on tech, but if they historically are super cheap and penny pinching around tech, right? This is going to be a tough sell.
For sure.
Based on your price model that I saw later. And I'm not telling you what to do or what to say. I'm just suggesting that you look into those numbers and you figure out how to favorably position yourself based on those numbers, because you don't want to be in a situation where you're fighting for budget allocation with these firms, right?
For sure.
Because if firms only spend, I'm just making this up, if firms spend historically 1% on tech, but and they spend 20% historically on, I'm making this stuff up, paper, right? Which would be easier to sell to a law firm, paper or tech, right?
That's good.
Based on how they allocate their budget, right? So you're already going to have to convince them to buy your thing, but you don't want to have on top of that and have them go fight for the budget to buy your thing. Because even if they believe in your thing, if they don't have the allocated budget for your thing, then it ain't gonna fly, right? You see how I'm going with that?
Yes, 100%.
So you understanding how law firms spend their money will help you position yourself in a way. You want to position yourself wherever they're spending, or you want to associate yourself with the budget line items where they're freely spending money already, versus trying to convince them to allocate more budget to this other thing.
Gotcha.
But in order to do that, you have to know where they're spending money.
Gotcha.
Yeah. This is good.
Okay.
Gotcha. That's really good, because I think
This is really good.
that we probably should have put it in here, but I read a report that like small, like I guess like solo law firms, they spend about between $3,000 and $4,000 a year or something like that. And then they extrapolated it out and took a look at medium-sized firms. And I believe that number was between $10,000 and $25,000 a year. But that number, we'll get that exact number, and that should help our case.
Is that for tech?
Yes, that's for tech.
That's for tech specifically. So you're saying, based on something you read, smaller firms spend about $3,000, they allocate about $3,000, and then medium firms spend about $25,000.
Yep.
And so let's just take that example, right?
Mhm.
Let's take the medium firm example. That's their whole budget, right?
Yeah.
Yeah.
So if you're coming in with a product that's also $25,000, not only are you trying to convince them that your product is worth buying, you're also got to convince them to spend their entire IT budget on your product.
Okay.
That's a hard sell.
Right. So that means
Especially yeah.
Yeah, right. They don't have enough money to spend. Even if they loved you, they don't have enough money to spend on you without sacrificing everything else in IT. That's just based on that quick, back of the napkin math we just talked about, right? So that's why I'm saying you got to think through this to kind of figure out how you can position yourself where, it'll be an easier sell for you guys.
Oh,
okay.
And I think that's a good corollary to this, right? So I think your pricing may need to adjust based on what these companies typically spend.
Yeah.
Yeah.
No, that's real. That's good.
So that's
we
my,
might. And
go ahead.
but if we go back to that, and it's kind of interesting, right? Because this is what we are charging outside of the pilot program that we've launched, right? So our pilot program effectively slashes this 28.5. And for so far, a lot of the early conversations and some of our customers and some of our customers that we're looking to, prospective customers that we're looking to sign, that pilot program pricing has been a lot more easily digestible by them, especially when we break it out year contract situation, Ron. I think it made it a lot more manageable for them. And I think we can definitely explore the different price points, make sure those price points align with more what our beachhead is spending. And then I think we can at least bring our price to a good point that satisfies what we need, as well as is within the range that they're anticipating.
Yeah, it's got to be. I think that's a good point to make, right? Because understanding typical budgets of small size law firms, what you're saying based on something you read was about $25,000 a year for IT, and your entry level product is already $3,000 more than their entire IT budget, right? And so you're saying the pricing was about half that price. So you can see why
every 2 years.
Yeah. So you can see why that'll be a lot more attractive, right, from that perspective. But then also from a sales and positioning perspective, what would they be able to get rid of when they buy this from you guys, right? Because they can recover some costs that way from getting rid of other tech that they no longer need because they're doing this.
Absolutely. And it's interesting that you brought that up, because last night we were talking and we was looking at some of the notes that we were taking from all of our conversations with different customers. A lot of them use like a tool called Go High Level, whether they use the tool directly or they use a flavor of it. And when we were exploring a lot of the integrations that we had with Go High Level, just from a our first customer, what we found was that we could effectively replace them at some point. So if we can find out what that spend is, right, Ron, we can figure out how to start pulling more budget from more spend from that budget, right? So it's like, hey, if you allocate, $12,000 a year just for Go High Level alone, and we're starting to perform a lot better in certain avenues that and functionality that Go High Level gives you, let's maybe start pulling that, like $3 to $4 grand from Go High Level so that the customer can build out automations, build out more automations with our tool, and have it tightly integrated. So, no, it's interesting because, like I said, we had this conversation last night, but it's good to see and hear from, you and your experience to sort of align what the messaging that we need is.
Yeah. And sometimes these things just take just kind of iterations and kind of going over things, but
1000%.
But yeah. Okay. So the next slide is traction. Let's talk about traction. So let me tell you how I define traction and most investors define traction. For most investors, traction is defined as paying customers. Not necessarily demos or pilots, but like regular paying customers. Like you have multiple paying customers of the people that you're trying to get paid and the people that you want to pay long term, right? So that's how I define traction. That's how most investors define traction. So pilots are not typically not traction. Partnerships are typically not traction unless they're paid partnerships. I would categorize some of that stuff as maybe momentum or, customer feedback or customer insight or customer intelligence, all that kind of stuff for sure. But traction is really meant to define paying customers.
Got you. So with this slide, then is it safe to say we can reword, like you're saying, like reword it? Because it's like the part of the reason why we had that slide in general was just so people will know that we got motion. You know what I'm saying? Like it's not like we're just trying to fund an idea. We're actually
the
rolling.
word I like to use is momentum, right? Because it signifies that you're building up steam. So that's the word that I like, but pick what you like, what you guys like, and what you think makes sense. But the word that I like is momentum. I think that signifies it pretty well. But traction is paying customers in my mind.
Yes, sir.
So what you're trying to establish here is that you have momentum. You guys are doing something. You guys are making progress toward launching this thing. That's really what you're trying to signify here, right?
Correct.
Okay. Yeah. Funding and utilization. A couple points here. Let me just make sure I'm hitting my notes. When you say we are raising 450 at 7%, that reads like you have already established the terms of this deal. That's how it reads. I don't know if that was your intent, but that's how it reads. Because as soon as you start talking about what equity this money is going to give, whatever, you start getting to the terms of the deal. And I'm not sure if you guys are ready to be having that conversation yet.
Gotcha.
Yeah. So, okay. Mm-hmm. Gotcha.
It's not bad, right? Those numbers aren't bad. I'm just letting you know that when you start talking about them, you're really into the terms of the deal, which I think that unless you already have the terms worked out from top to bottom, then it's best not to start that conversation.
Gotcha.
Yeah.
Gotcha.
And that's actually really good that you bring that up too, because it actually takes my mind to we're showing our hand before the dealer deals the cards. You know what I'm saying? Like if we're telling them that this is what we're offering, I get it if we already have that locked up. But what if they say, What if somebody looks at it and say, man, I'll take 3%? You know what I mean? Like, I feel like a part of this is we're showing our hand before
Yeah,
we can
yeah,
even,
yeah. It's premature for sure, right? Just say what you're trying to raise,
Got
and
it.
your lead investor. So you say we're raising 450. You guys have in your mind how much equity you're comfortable parting with for that 450, right? But like you said, you kind of tipping your hand, right? Um, so you can have that in your mind. That lead investor will negotiate terms of the deal with you.
Gotcha.
Gotcha.
That makes sense.
Yep.
Okay, so 450. Let's say you want 450. Here's one thing that I don't like, and I think most investors would not like it. The line where it says this capital will enable our founders to go full time. That line right there. Some people would take that as, why do I have to fund, why do I have to fund you going full time? Why haven't you figured out a way to do this full time? If you believe in, and these are not my words, I'm just kind of paraphrasing, investor hive mind, right?
Mm-hmm.
Mm-hmm.
I would think if you really believe in this, you would have figured out a way to do it full time. Or if you haven't figured out a way to do it full time, figure out a way to build some traction and momentum as a side business until you generate enough revenue to go full time. And then that shows you have some skin in the game and you grew this thing bootstrap, blah, 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 blah. Right. That's kind of investor hive mind speak.
Gotcha.
Right. So tell me your thoughts around why you put this line item in here.
Just to be honest with you, just to be transparent, right? I mean, there's no way that, and again, this is us talking, right? Like, this is us talking as,
Between Ron and I, we got like 4 jobs.
yeah, like we literally literally
Yeah.
we're working now, like, you know what I mean? And so again, just that's part of that transparency, man. We have to get out in order to scale this thing. So in the effort of being transparent, we had to add that as a line item, which is where you see the team and core operations. So that was why we added that in, just to be fully transparent. You know what I mean? With investors and whoever else is looking at the deck.
Gotcha. Okay. So what have you guys done okay, so I know you had the other business, the resume business, right? And you said that's out there in the wild and I guess doing whatever it's doing. So tell me, for Lana AI, how have you gotten to the point where you have it now, where do you have like actual working pilots out in law firms of this right now?
Yeah.
Yeah, we have an actual connected device up in Indianapolis right now. We did a installation 2 weeks ago.
And so you have one pilot that's going right now. So that was a paid pilot?
Yes, paid pilot. And then we have another customer that we have a call with tomorrow, who asked for an invoice. So we haven't started their onboarding, but he was just like, I love what you guys are doing. Send me an invoice, just to be transparent, right?
You just send him an invoice?
Well, the reason why he said don't, well, we're going through one more call with him, but we're going to send him the invoice after that call. But yes, he's locked in. He's locked in.
Shit. If somebody say send the invoice, you send that motherfucker invoice immediately.
Right, that part.
Look.
So
You're right.
that call you're gonna have with this person, that could be the call. Sounds like you had a call with that person already, right? It sounds like that person said, send me an invoice. It sounds like you have not sent an invoice yet. But so let's just play this through. You had the call. He said, she said, send an invoice, send that invoice immediately. Couple follow-ups, whatever. And what you're gonna get from those follow-ups, either this person is gonna pay, and then you got to pay a customer, or this person did not pay because they got reservations, questions, whatever. And then this second call that you have with this person could be the call to address whatever concerns that they have, this, that, and the other, right? That's what the call could have been for if they hadn't paid. And if they did pay, then obviously it could be the onboarding or whatever you do after the person paid, right? So if somebody says send the invoice, you send the motherfucking invoice.
I definitely do agree. The challenge with that is because we do have to bill him for some of the custom integrations that he wants. So there's an element of what our hourly rate is for those custom automations. So
send the base invoice. Send the base invoice.
Okay.
You want to collect money as fast as possible, right?
Sure.
Send the base invoice. Send a base invoice for all the shit that you know this firm is going to absolutely have to have. And then you do a secondary billing for the customizations.
Okay.
That's
you want them spending that money, because the quicker they spend that money, whatever conversations you're going to have for the customizations, that's going to be just bonus, and they're already going to feel locked in.
Got it.
Because they already spent money for the base, right?
Got it.
Now your conversation is about customizations, which is going to give them, I don't know how you say he's locked in, but again, these conversations are just more opportunity for him to back out.
Absolutely.
Oh, I didn't realize I was going to have to pay another X amount of money for these customizations. You know what? That's all right.
Gotcha. Okay. Yeah.
So when somebody asks for the invoice, you send the invoice, because you've done your part. The rest will be up to them, and then you can try to close them.
Got it.
Okay, so that's that. So let's say, okay, you get to 450. And so team operations, obviously, that's going to be payroll for the most part, right?
Yep.
Is that payroll for you two or for the other two individuals that are listed in this deck?
That's payroll for us, Mike and I.
Okay. What about those other two folks?
So the other two folks, as it stands right now, we have like working percentage agreements with them. So Will, he was the guy that got us the partnership with the National Bar Association. So it's not really our expectation that he'll be full-time immediately until we can actually bring him out. But we do have a percentage of every sale. He's getting that. And then Adriana is we can call her a solo sales rep that's over in the Los Angeles area. And for every sale, we're giving her 10%.
So she's an independent contractor. She gets paid on commission based on what she does.
Correct.
Yep.
So Mike and I were the only ones that were factored in.
All right. Product and development. So we're kind of almost covering two slides at the same time with this. But product and development, right? So Mike, so you handle all the tech, right?
Mm-hmm.
And then Ryan, you handle what? The operations? What do you handle?
Yep. All business side of things. Yep.
Okay. So you got the CTO and the COO or CEO? Who's the CEO? Who's the CO? Who's the CTO?
I don't think we've ever really talked about it.
We've talked about it, but we never really keep on wrong.
Yeah, I was gonna say, like, so from a Red Rooster technology perspective, Mike is the CEO of Red Rooster. I am the CFO and the secretary. So that's as it relates to the Red Rooster as the operation as a whole.
Yeah.
So, but to your point though, it was also something that we were thinking about, obviously down the line, would be hiring a CEO of sorts, right? Because I mean, at what point does that make sense? And we wouldn't do that right now, you know what I'm saying? But you know, at what point do we hire somebody to come a good old white boy or something like that and come in here and do what he got to do? I don't know. Just something we never really thought about. But
I mean, you got to think about that because that's the person running your company, right?
Yeah.
The CEO is really the person who's plotting the strategic path of your company, and depending upon the size of the company, right? That person may be an active role in executing that, right? But well, there's no doubt about that. The CEO is a active role in executing that. Sometimes, in conjunction with the COO, and sometimes without a COO. It depends on the structure of the company. But the CEO is your strategic leader and operational leader, right? So you need one of those. And I'm of the firm belief is that that's a co-founder role. You two are the two co-founders. You have to decide between the two of you who's going to fill that role. It's not a good idea to bring somebody in for that role early on because you don't even really know what you're working with yet. So
yeah,
that's got to be
Yep.
you two.
Yeah, and
Who's the CEO/COO? You guys decide that, and then I mean you're obviously gonna need a CTO because what you guys are running here is really an IT services company. Just your IT services happen to be AI, but that's really what this is. As I look at it, it's an IT service company that specializes in AI.
Yeah, we have, as you can see, we're not really strict sticklers for titles and stuff like that.
Yeah.
We've been operating as we're just co-founders building the product. But you do bring up a very good point. I don't think we've had that discussion internally amongst you and I.
Yeah, and it is really less about the titles and more about the responsibilities, right? Because the stuff under those titles still have to be done, whether there's a title or not, right?
Yeah.
And I'm sure you guys are doing a lot of this stuff, but you just kind of haven't thought about it in that capacity. But I'm gonna tell you, you have to think about it and talk about it. And I don't know how long you guys know each other and what kind of relationship you guys have. We'll get to that later. But the top two biggest reasons for startup failures is founder breakup is number one, or number two, depending upon who you ask, but obviously is up there, right? And founder breakups happen because of misaligned expectations, and we didn't talk about it. So I assumed she was going to do it, or she assumed you was going to do it, and just that's what happened. So you guys got to talk about how this company is going to be ran, who's going to do what, how you guys think it's going to be done. Titles are really irrelevant, but the work that needs to be done is really what we're talking about here. The title is just a container that holds that work, but the work still has to be done. Titles or not.
Got you.
So you guys need to work that out. And then I understand the rest of this, so that's fine. Like I said, I think we kind of covered two slides at once with this, the team slide and the funding ask slide. The product vision and roadmap. I think it's good that you're thinking about this because it shows that you're thinking about it. But an investor is never going to believe something that you say you're going to do 5 years from now, right? It's like, yeah, whatever, right? So not, not because they don't trust you, right? But because companies pivot all the time, right?
Gotcha.
I mean, this is a pivot for you guys, right? This company is a pivot for you guys, right? So you know what I'm talking about, right?
Yeah, sure.
Right.
Right.
So really 18 months, 24 months max.
Got it.
Excuse me. It's really all you need to talk about. It's okay to have this stuff in the back of your mind. But in terms of a pitch deck, 12 months, 18 months max, really 12 months. For a company as young as you guys are, 12 months is more than enough.
Got it.
Got it.
But since you have this 5.5 year to 10 years thing in here, when I look at this, it's like you start the journey saying on-prem, but by the time you get to 5.5, 10 years, you're back in the cloud.
No, that
Did
makes
I,
sense.
did I
Yeah,
misread
yeah.
it?
Mm-hmm.
No. You
Yeah,
read
that
it
makes
correct. It does tell that story, right? It does communicate that. I think what we want to communicate is the on-prem is what gets us the locked-in edge device, gets us locked in there, which enables us to, and then turn, build out a full ecosystem of on-premise in the cloud services that can collaborate together for a holistic sort of customer 360 approach. But the way this is described, it tells it completely opposite, right? It's like, then why not just start in the cloud?
Exactly. Exactly.
Yeah, because we definitely want to own the hardware for the software, which is why we're going this route. It gets us that top-down ownership, but
Yeah.
we can definitely communicate that better.
Yeah. And but like I said, right, a company as young as this, which is literally brand new, right? 12 months is really all you need. And then you don't even bring up that
You got to go
confusion.
there.
Now, you guys should work this out together, right? In terms of your long-term strategy. Um, and I think that's fine, but there's no need for it to be here. And then I would also say, be ready for the questions around. I mean, yeah, just leave this off because it's more confusion, more confusion than what it's worth. Talking
Got
about
it.
that differently, right?
Okay.
Because your value proposition today is we bring your stuff down from the cloud, so you don't have to worry about privacy, security, blah 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 blah, and you can still do all your highly regulated client confidential stuff within the sanctity and security of your own internal IT infrastructure and physical infrastructure, right? That's your value proposition. So stick with that for now.
Gotcha.
Gotcha.
Talk about this. The other huge thing that's missing from here is competition. You guys don't talk about competition at all, but there has to be competition, right?
Okay. Yep.
Mm-hmm.
So yeah, you got to talk about that.
Yep.
I think that was like the biggest glaring omission from this.
Yeah.
And I may have more questions based on whatever you end up putting in here around that. My other question, going back to market, two questions. The first is, you guys do realize that you're building an IT services company, right?
Yes.
Yes.
Is that the intent?
So the intent is to become a product company. That's the intent. Right now, with how we're delivering the product, it's putting us towards the, if we're not careful, it can drive us deeper down the MSP approach. But because of what we're building, especially with our early adopters, what we're, at least from a product perspective, we're going to have a hard cutoff. That's essentially going to be the product that gets delivered to every single product. So, every single customer, so that we can focus on the productization of it all, where those custom accounts, when it comes to building out the workflows, that workload will effectively be shifted more to the consumer, because the way the product is being developed, the automation side is specifically just like N8N. It handles JSON. Our customers will be empowered and trained to be able to build their own automations through the system. So that will give us our ability to get to more product.
I know a company there. I met them in Detroit. I don't know if they're based in Detroit or not. But their whole company, they build custom AI workflows for small businesses. So, and I said to say that you may have to have a kind of Rolodex or partnerships that you can refer people to for that kind of stuff, so that you're not mistakenly getting into those different avenues of business. That's not what you want to do, right?
Gotcha.
If you want to focus on your core competency, then you need to have a way for your customers to make the most out of your product. And sometimes they may have to leverage other service providers to do that workflows or whatever, right? So, it's going to take a lot of operational discipline and sales discipline, because salespeople will promise you the moon just to get you to close a deal, right? So, of sales discipline and operational discipline to make sure you guys are squarely focused on your core product offering, and you're not, going off on all these different kind of service-oriented tangents.
Yep. And that definitely aligns with our approach, our development approach, right? Because it's becoming a platform where extensions can be built on top of it. And I think the reason why we're so heads down and focused on making sure that our initial customers have everything they need, so that this becomes the foundation, that will give us our guardrails even further down the line as it relates to sort of closing off this platform, making it able for other devs and other companies to now become Lana AI developers, sort of like that Salesforce approach, right? So that's what we're skewing towards. And in the beginning, what we were doing sort of was telling the opposite story. So we had to really go back into, okay, from a product perspective, where are our guardrails? And now that we've identified what those guardrails are, we're allowing our current engagements to sort of alter that, well, not alter it, but add to it a little bit, so that we can push sort of some of the, how far this product can go. But to your point, we definitely need to make sure that we're focused in on that core product, which is Lana AI, which is being sent consistently repeatable to every single customer.
Yeah. And then my one more question and then one more comment. And I know we're over. You guys got a few extra minutes? Let's go back. Let's talk about market size again. Let's say you got 450. You got the 450. What do you think your first, how can I phrase this? I guess what are your revenue goals for this company? Not in year one. Let's just call it 5 years out. What kind of revenue do you think you can achieve with this company within 5 years?
Well, to be honest, I mean, again, this kind of things we have not necessarily fully fleshed out, but with our margins being what they are, I mean, I'm thinking by year 5 we could be well over 10 million.
Yeah,
Well
by
over
year 5, by year projected, we have a financial model that we've input all of our information into, and it's looking 10 mil within 5 to 7 years.
10 million within 5 to 7 years, and then what?
Then we go buy a yacht and go to the islands with Abdul. I was like, I mean, you know, maybe some other ventures product related. I don't just, you know, that's a good question. It's something that we got to think about, right?
Yeah, we're in a position where we feel like we'll be able to sell if the right number comes. We're not opposed to selling as an exit strategy if the right number comes around, or right acquisition partner comes around. But we really just want to continue to grow this business, and we believe that within 5 to 7 years time we can have double digit revenues. Our margins, because we've priced in, once we sort of factor into the pricing side of things, maybe either come down or come up, but with how we really want to build this product out, we can definitely achieve that double digit million in revenue with a healthy margin.
I appreciate your answer. A couple of comments on that. I think you're thinking small. I think you guys are thinking way too small. When I look at this, you know, if the product is awesome and the pricing is right, this thing, I believe this can be a, $50, $100 million business within 5 years. That's what I think. Because there are multiple industries that you can apply this to, law just being one. You can apply it to medical, you can apply it to financial, different industries you can apply this to. It won't get to that number just in law, but if you start stacking industries, it can get to that number, I think, pretty quickly. But again, it depends on obviously the product. The product can't be shit, right? The product has to be good. And you guys have to want it to get that big. If you don't want to get that big, then I mean, it's not gonna get that big unless you sell it. And that person,
we definitely want to get that big. Honestly, we definitely want to get.
There's no question. Yeah, there's no question. There's no question.
And my other comment is, you raised the 450, right? A venture firm is not going to invest in this business if you have $10 million goals, right? Not because $10 million is not a good number. It's because that $10 million doesn't provide enough revenue to give them the returns they would need on that investment, right?
Got it.
A typical VC, they're going to be looking for at least 4 or 5, between 5-7x in the return. Some, right? I mean, and that's like the smaller ones. Some of the bigger ones, they look for 100x returns, right? Mm-hmm. So I'm saying this to say a couple of things. Whatever your goals is for the company is fine. Is your company. But that affects how you raise money and who you can raise money from, right? it's perfectly fine to be a $10 million company, but that's not a big business. That's called a lifestyle business, right?
Got it.
You know, you can run an e-commerce company and be making 10 million a year. One person can run an e-commerce company and be making 10 million a year, right? And they're supporting their lifestyle. You know, they can travel nice, they got nice houses, blah, 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 blah. And then they Instagram fly, right? That's a lifestyle business. But when you're talking to professional investors, you know, venture capitalists, they typically do not invest in lifestyle business, right? Because they don't make enough money to generate the kind of returns on investment that a venture capitalist would need.
Mm-hmm.
So that's venture capitalists. Now, obviously, you got other types of investors. You got angel investors. You got other investors that may not require as much return. My point for saying this is I want you guys to think about, and don't play small, right? Think about what you really want for this business. Think about, like, in your wildest dreams, how big this business could get. Frame that within reality, obviously,
Mm-hmm.
but don't limit yourself by reality, right? So think big, and then check it against reality,
For
right?
sure.
Gotcha.
And then whatever the outcome of that exercise is, you target the types of investors where that makes sense for them to invest in.
Gotcha. Gotcha. No, that makes sense. We definitely don't want Instagram lifestyle business. We don't want that. That's not something that Ron and I are particularly fond of. We don't think that they scale well. We don't think that they're sustainable. So our approach to how we sort of build our products and price them is that we try to bake into the price as much as possible for us to not have to go the institutional route and try to raise hundreds of millions of dollars and then be one of those companies that raise hundreds of millions of dollars and then have to just continue raising, right? Which is why we sort of shot so low, right? Because we wanted to tell the story of we're not in this to raise money from you and then need to go raise 3 or 4 different series of funding. We want to raise money so that we can grow this business, scale this business, be with an investor that's going to, see the vision that we see, help us fine tune what needs to be fine tuned, and lead us to the point where, well, maybe not even lead us, but just help us get to the point where we can get to profit ready. And with how we've priced it and how we've sort of analyzed what does our audience look like, and I think it's not communicated in this deck, but we're looking at trying to attain at least 100 to 200 customers a year. That gets us to between $1 million and $2 million revenue. Our profit margins sit roughly between 56 and, I think if I last looked at the report, we can send that over too. That puts us between like 56 and maybe 57% profit margin, just from how we price and sort of everything else that's been baked into it. So that's sort of our goal. That's our goal, right? And we were trying to communicate that, but we're definitely not looking at small visions. Like we want to grow this business. We want this business to touch countries. We want it to be a global business. Like we looked at Salesforce, and Salesforce has 150,000 customers globally. And I was talking to Ron and the rest of our team. I was like, yo, there's no reason why we can't get that. There's no reason why we can't reach that, especially with the on-prem approach that we have right now. And then some other product lines that we can introduce as we continue to grow. So, that hopefully that gives a little bit of background onto how we sort of approached it.
Yeah, that helps. That helps. Yeah, that helps. So let's do this. First, let me just double click on something that you said. around the margin. You mentioned something about margins and revenue and stuff. Oh, you mentioned you don't want to have to keep raising. There is nothing inherently wrong with having multiple raises.
Mm.
What can be problematic is sometimes why companies do those raises, right? Because some companies raise because they just aren't profitable enough, and they got to raise to try to get toward profitability and all other kind of stuff, right? So it depends on why you're raising. Number one, it's okay to raise multiples if there's really good reasons and that money is going to be put to good use. But when you double click on that, right, it all boils down to unit economics, right? How profitably can you sell whatever you're selling, right? And that's one thing that you don't have in here. You don't have unit economics. Sounds like you're talking about it and thinking about it because you mentioned margin and stuff. But I like to see unit economics in here because I want to know, right? Are you selling at a loss, right? And just trying to and believe you're gonna make money based on volume because that's not how math works, right? uh, but I see that all the time, right?
Yeah.
And it is kind of funny, and I try not to laugh at people's faces, but I see it all the time.
Understand.
It's sometimes people just kind of they misunderstand. So here's what I'm going to do. I'm going to send you like a template, a pitch deck template that I created. I didn't create it for the look or whatever, but for the content, the stuff that I like to see in the deck. That if you provide that information, you're going to proactively answer probably 95% of every investor's questions. And every investor has their pet peeve, so you're never going to be able to get everything 100% with one deck. But I think with this template I'm going to send you, you're going to easily cover 95% of questions that investors would be worried about. The other 5% is really personal preference that you can never really fully accommodate unless you know that person already.
For sure.
Okay.
So I'll send you that. Take a look at that.
Appreciate it. Thank you so much.
Thing.
Definitely.
And then when you guys ready to talk again, schedule some time and then we'll chop it up again.
Sounds good.
And I really do like this idea. I think the problem you're after is a compelling problem to solve. The concerns I have are no different than what I asked in my first meeting is the execution of this. The product has to be solid, obviously, and then you guys have to be able to execute it, right? It's not as easy as just software because, depending upon how you product size it, right, you may make it that easy. But as of right now, right, it's a lot of moving pieces and parts, and it may require some physical on-prem work, and it's different kind of nuances. If you can get all that stuff worked out where you eliminate the majority of the execution risk and implementation risk, and you just really get this as a product that you can just, it's hardware oriented, that you can get it out there almost as good as and clean as software, then I think you'll have something here.
Appreciate that. Thank you for your time and going through the deck and having this feedback for us, because this is our first time, going down this journey of raising. So everything that you said were things that we've either heard for the first time or it pulled stuff from memory. But we thank you so much for all this game that you gave us. We're going to do our part. We're going to make our changes. We're going to watch tape. We're going to get better. And when we're ready, we're going to put some more time on your calendar and show you our growth and, see where we can go from here.
Sounds good. Thanks for listening.
Cool.
I appreciate you guys being willing to accept feedback. So that's major. So I'll send you the template and then I'll wait to hear from you.
Sounds good.
Cool. Sounds good, man. Appreciate you.
We were athletes, so we're coachable. We understand what that means.
It's funny you use that tape analogy because I literally used that analogy last week on the call. Right?
Oh, yeah.
Watching tape, learn, and then get better. All right. All right.
All right,
fellas.
Abdul, we appreciate you, man. Thank you.
Later.
All right.